This is my forecast video for what I will be anticipating in the third trading week of March 2025. That would be the week from, I believe it's Monday, March 17 to Friday, March 21, 2025. As we can see, the weekly candle closed like this, bullishly, but near the bottom half of the candle. So there was a bit of a rejection after trading into a monthly fair value gap. I will analyze what I think that means and take a look at possible potential trading opportunities on all the pairs that I trade. But as usual, before we go into the analysis and the forecasting, we'll take a look at the economic calendar to see how I will be navigating the week. We have something curious here. We can see that, oh, sorry, this is the wrong week. So, Monday, March 17, we have core retail sales month on month for the US dollar and retail sales at 1:30. That is my time UTC plus one. Of course, as usual, there isn't much to write home about there. The only important thing is to make sure that you are not entering a trade at most an hour before the news releases. So 1 hour up to the news release, no trading. But if I have a trade, for example, Monday London session, I'll be happy to take it. Tuesday has no news, and so I'll have no problem trading any setups that present themselves on that day. Wednesday is a big one. It's FOMC. The nature of FOMC is such that it can throw the market into complete disarray before and during, even after its release. And so what I do is FOMC Wednesdays, I don't trade. So I will not be trading on Wednesday. On Thursday, we have pound, claimant count change, and the official bank rates for the pound. Now, official bank rate is the pound equivalent, the um, UK equivalent of FOMC. It does not impact the market as much, does not, at least does not tend to impact the market as much as FOMC does. And so the way I've decided to navigate it is to treat it like I treat high impact news on other currency pairs. For example, the way I treat retail sales. Now, what that means is before 1 p.m. my time on that Thursday, I will not be entering any trades the whole day. Now, whereas with things like retail sales, if I see a trade Monday, or if I see a trade London session on that day, and then the news is coming out at 1:30, I'll still be happy to take the trade because I don't anticipate it to wildly move the market. But this is a bank rate release and it's on the pound. Now, before, what I used to do was if the pound is having major news like this, I would avoid the pound altogether for that day, but I will trade euro if an opportunity presents itself ahead of the news release, and I'll trade New Zealand dollar, for example. But what I realized was that whatever it is you're trying to avoid on the pound for that day, a lot of the time will bleed into the correlated pairs as well, such that because pound is waiting for major news, even if you have a trade on euro, for example, and you enter it, it might just consolidate. Euro might be consolidating while pound will be trading higher or lower, waiting for that news release. And then when the pound news is released, they all move together. That has been my experience so far. So I've determined that I'm just going to treat it the way I treat. I'll treat it as if the news release is happening on all the pairs that I trade. After it has come out, if there is a setup, I'll take a trade. And so that's how I've been navigating Wednesday and Thursday. Friday doesn't have anything, thankfully. And so today I'm seeing 3 clear days where I won't have any qualms taking trades. That is Monday, Tuesday, and Friday. Wednesday is out of it. Thursday, I'm only trading if I have an opportunity after the pound news has released, even if I'm not trading the pound. So let's go back to the charts and see what price has in store for us. Now, the weekly candle was essentially a doji on the pound, was a bit of a rejection, but didn't reject all the way back down to the lower third of the candle. And so, what this effectively means now, the reason I'm not drawing it is because There are other fair value gaps nestled inside of this one, but you can see that there is a huge weekly imbalance that has now formed. But I'm not going to draw it because it just covers such a large space that there's no point drawing it. What I will be noting is when we are in that region, I will be noting lows and highs and how price reacts to them. If we go down to the daily time frame, we'll see that the major points of interest I'm looking at is still this 4 hourly and this daily fair value gap with this 4 hourly fair value gap nestled inside it. I believe that now you can see that price has traded into this monthly level. If I go up to the monthly, you see it clearly. I've noted it monthly fair value gap. You can see it was the fair value gap that was formed between, I believe it was between September and November of 2024. So October's candle was the expansion that made the fair value gap possible. What that means is that on the lower time frame, we have a fair value gap that price has now traded into. This is the weekly. You can start. This was a weekly high. Price took it out only just and then rejected. Now, what does that mean? This monthly fair value gap could potentially be a level from which the pullback for this huge bullish range is going to happen. And so this huge bullish range, depending on the trend, might want to pull all the way back down to 50%, 30%, 75% of the range. Between 60 and 75, which should be this daily fair value gap here. But I've not marked it out because it's so far away from price as to not be relevant right now. But this level could be a potential catalyst for that pullback. And I think it's about time we saw one, right? So this is what I will be anticipating. If price decides that it's going to trade lower, I am happy to take short positions until price reaches. So let me pull out. Okay, yeah, this is it. I'm happy to take short positions until price trades into this daily fair value gap. Then I will watch to see what price wants to do, if it wants to continue higher or if it wants to go a little lower to come down into this level before then reversing. Now, of course, as it is, I still think that there's potential upside for price in that there's every chance that price does this, takes out this initial high that has been printed as price trading into the monthly fair value gap. Because a lot of the time, what I have noticed is this: price will have a higher time frame key level like this. Price will take it out, but only just. You can see that price did not really trade through it, and there's still all of this potential upside. There's a weekly fair value gap sitting on top of the monthly one. So there's still all of this imbalance that price can look to trade into. You can see imbalance here, imbalance here, imbalance here. This is on the daily time frame. What I have noticed that a lot of the time, often, price will tap into a higher time frame level, but price tends to not accelerate away from higher time frame levels. You seldom see price just tap into a higher time frame level and then boom, move. Case in point, look at this monthly fair value gap. This monthly fair value gap had been traded into first since 22nd of November 2024, and I had my eye on it for a long time. What happened was that price traded into it, and then after trading into it, we can see that price decided to consolidate inside it, tapped into it, traded away, came back down, took out this low, traded away, took this low out, traded away, created this imbalance, came back down, retested it, came back up again, consolidated before eventually accelerating away. So now this is a much, much larger fair value gap and had been sitting for many, many, many more months. So we may not see this level of activity inside this one, but it is very possible that, and I have seen it happen, that this initial push away from the level may not signify the reversal of the trend or the pullback just yet. There is every possibility that price will trade higher, take this high out, because this is the more recent liquidity pool, because now it has created relatively equal highs here, highs here. So there's every possibility that price takes this high out, then begins the pullback. So if price, for example, were to trade higher, create some liquidity pool, take out that liquidity pool along with this one. That's why I have an alert, as you can see, placed at this high. If it takes that out, I will begin to look for short trades into, at the very least, the equilibrium of this range. So if price does that, let's say somewhere here, I'll be looking to short until price trades into this daily fair value gap area, at which point I will be looking for signs in price to switch my bias back to bullish for this trend to continue back to the upside. That is what I'll be looking at. This is the daily time frame. As we can see, no fair value gaps, nothing of interest just yet. And so this daily level is still the only thing that I'm looking at, that I'm interested in. If we go down to the 4 hour, let's see if there's anything. Well, 4 hour, there's this fair value gap here. But to be very honest, I don't think it will do much to price. Now, remember I said that I have no problem with price trading higher to take this high out before eventually trading lower. There's every possibility, now that I'm thinking about it, for price to tap into this 4 hour fair value gap early in the week to then start trading higher. So there's every chance that this week might still be a bullish week. What I will be looking at for me to take a trade, however, is I want to see some recent liquidity to be created, a recent liquidity pool. So maybe Monday to do something like this, or Monday Asia session to do something like this, and then Monday London or New York, or preferably Tuesday trades takes that low out, trades into the level, and then give me bullish signs for me to trade away from it. That's what I'll be looking at. Let me go to the pound, see if there's anything different. On the pound, we have this 4 hourly level, weekly level, daily level. This is a daily fair value gap, all of them sitting nicely inside each other. There's this low over here. I had thought that price was going to trade into it in this week that has just concluded, the first week, the second week of March, but that did not happen. And so I will be looking to see if price can do that, create some liquidity pool, then take it out, trade into the level, and then what the hell was that? So I'm looking to see if price can do something like this, trade into the level, take out that liquidity, and then trade all the way to the upside. So that's what I'll be looking at. Let's see if there's anything on the 4 hour. No, nothing. Similar situation with the New Zealand dollar. Now the New Zealand does not have that clear of a structure profile as the other ones. As you can see, it has been consolidating. But in the most recent bit of price action, we can see this imbalance here, this 4 hourly fair value gap sitting in the discount of the range. And so if price, does something that coincides with pound and euro, something like this, take it out, trade higher. I'll be looking to take a trade there. Price is trading in a monthly level, as we can see. But if this monthly impulse down, essentially failed, right? And then price is trading all the way back and is now consolidating here. This might suggest that there's still more potential upside to the New Zealand dollar. And so that's essentially what I'll be looking at for the third trading week of March 2025. We'll see what trading opportunities the week offers, and I will review my performance at the end of it.